Good afternoon and welcome to this event with NeoDynamics. This is a pure Q&A event, and topic today is elaboration on the recently press release from the 1st of March, where NeoDynamics released investigating options to raise long-term capital. With that said, I would like to welcome all the participants, and as always, please post your questions during the session on your right side, and I will forward them to the management. So, with me today, I have the CEO, Anna Eriksrud, and the CFO, Aaron Wong. Welcome, Anna and Aaron.
Thank you.
Hi.
Thank you. So let's start out with Anna, and Anna wants to shed some light on the funding up until now, or up until end of 2022. So please, Anna, take us through.
Yeah, a bit of background just. As some of you remember, we went through an IPO end of 2018. At that time, we had our product with this precision biopsy instrument. We had that CE approved only, and it was important for us to go public. However, in 2020, as you remember, we had the pandemic. Just before that, we did a large directed issue, and we promised at the same time our shareholders that you will be able to participate next time, which was happening now 2022 in the springtime. Having said that, it has been like a red line all through that we have had a plan to get our product through with experience in Europe, however, with a focus on the US market. And we filed in the beginning of 2022 at the same time as we had this preferential rights issue. And we got approval in September. And hindsight, we can say that it was actually a very smooth process, confirming again that we had a strong quality file that we presented to FDA. We decided to wait for the FDA approval, not to start any preparations in the US market, to be cautious with the costs. And we started then full speed now from September to prepare ourselves to hire the first people. And we hired Matt and Brandon, as we mentioned, but of course they have a family name as well. So Matt Colpoys and Brandon Rayleigh. They are the ones that are responsible now for the launch in 2023. And for a company, a medtech company like ours, I would say that the aim is to come out in the huge marketplace in the US. At the same time, those that are working in a medtech company knows that it is all the time planned work with financing your business until you really are out in the marketplace. So that's the background. So with that, I would like to say that we feel confident where we are now. A lot will happen, but still it is very much, there is a plan and we follow that. I hadn't mentioned, of course, that we also, Spotlight was the first place. Then we did an uplist with First North 2022. So that has also been in the plan to make ourselves available to a broader audience with the First North growth market. So
thanks a lot. Thanks a lot, and really, really nice of you to shed some light on the funding up until now. And 2022 was really a busy year. And when you received this message from FDA long before expected, of course you changed the ball game as well, and that's why, of course, you press released the statement that we're talking about today. So with that said, Aaron, why are you seeking options for long-term financing? And can you elaborate a little, because you mentioned a lot of different possibilities and some of them are already in place?
Yes. So why we're seeking long-term financing? I mean, this is a question which I've touched upon several times in the past. I mean, we are a 100% equity finance business, and for a company like ours that's at this stage in its story, successive capital raises are very much course of business. I mean, there's nothing unusual about us looking for further long-term financing. As Anna touched upon, we had the rights issue that was actually completed around this time last year, and at the time we said, you know, we expect this to last until the first half of 2023, which it has done. So it's only natural that we start the process again. That being said, I don't want to say we're just starting the process now. Since we received FDA approval and we communicated that we would be starting the commercialization at the beginning of this year, plans have been in place and strategic discussions have been made around how we look to do this year. And then on the side of the options that we outlined in the press release, I mean, what we wanted to say really is that we're considering pretty much every option in order to get this done. That being said, we obviously want an option that is sustainable and good for the company. We'd never choose something that would jeopardize the company in any way. We've made decisions in the past to finance the company in various different ways, and each way has proven to have been the right choice. And we will continue along those the same thoughts this year.
Yeah. So far, you already secured a loan agreement with one of the biggest shareholders in the company.
Yes, and he's been a shareholder for a long time, probably a lot longer than many people have realized. And his commitment to the company was a very important message, not only to us, but also hopefully to the audience as well, that our largest shareholder continues to believe in both the company, its product, but also the management here. The loan in itself, the thought around the loan is that if at some point in the future new shares would be issued, then shareholder approval would be sought to convert that. So the EGM was part of a broader plan to give the board of directors the flexibility to maneuver basically in what is, I would say, a quite challenging market.
Yeah, that's right. And with that said, you know, the flexibility that you ask for, well, you have a good track record already in the company to you know, if something happens, you know, well, then you take care of it immediately, and that's the message to the board, if I understand it right.
Yeah, we're a small company, and I think being a small company gives us a lot of advantages in that we don't have many layers of management. It's not highly bureaucratic in the company at all, and I think that is really a positive for us, and it's something which is a strength, I believe, at least for us and the way we're going.
Yeah, for sure. Yeah, you have showed a really good speed already. Aaron, if you just take one step back and look at your current burn rates without NeoDynamics in US, how is that looking? And if we assume that you wouldn't enter US, would that still be enough to you know, to cover first half of 2023 as originally planned?
Yeah. Well, it's funny, whenever I hear burn rate, I kind of shiver because it sounds painful. I like to use the term run rate because it sounds a lot less invasive. But if we think about our burn rate last year and also how we've kind of tracked into this year, what I would say is it's stable. We've got what we say boots on the ground. We've got a fully up to speed sales team that are basically raring to go. We press release last year, we faced some delays with the product to introduce incremental improvements to the product, which is all going to plan. So everybody's ready, really. I wouldn't say we've loaded up on any more costs than we had before. And with that, I very much believe, and I think I speak for Anna as well, that we have the necessary resources in place in Europe to really commercialize successfully this year. And then if we look at the US, I mean, it was only natural that we started to build out a US organization after we received the FDA approval, because, I mean, these things take time. Hiring people takes time. Developing a strategy, a go-to-market strategy, pricing strategy, all these things take time. But with that, we were very mindful that we weren't going to start running before we were walking, in that we wouldn't load up on people and resources until the path was clear for us in our mind, and also the financing. I think that's also an important part to stress. And in that, and in combination to that, we made a very active decision to partner up with bigger firms in order to help us along the way. We didn't insource any supply chain logistics. We decided to partner with Uniphar and Diligent Healthcare. Thank you, Anna, on this journey. And so far, they have delivered exactly what they promised to deliver. So I very much expect that they will be very key to this moving forwards.
Thanks a lot, Aaron. Yeah, and agility is of course of great importance here. And you just mentioned, the whole ball game around that. So if we look into US and you want to be cost effective, and maybe I should ask you that, Anna, what does it take to build and put an organization in place with the aims you have for 2023 to full commercialize NeoNavia, as in terms of sales reps? Aaron mentioned the partnerships. Could you shed some light on that, please?
As you may recall, we have decided to go out with our FlexiPulse needle as the first one. We are niching ourselves in the possibility to offer the breast surgeon something unique, because they could then choose to do a less invasive method with a biopsy instrument like ours instead of the surgical biopsy. It is very important for the woman to understand if the cancer is spread or not. This is why we believe that we can turn to privately insured patients that will be able to afford the latest in this area. And that is our NeoNavia FlexiPulse needle used for the biopsies. We have said that people that sell the product will be experienced people that have done this before. This is where also they will collect experience, they will collect contacts. That's not where you should buy service. That's my experience. That's the experience of those that are here at NeoDynamics, also realized by the board. However, you can buy service and keep a lean organization if you look at medical information, if you look at logistics and deliveries. And that's what we have done here. So once we decide to grow even further, then we will be able to do that within Uniphar, within Diligent Healthcare. We don't need to discuss headcounts, etc. It is more percentage of time, how much coverage do we need, etc. And talking about amount of salespeople to start with here, it will not be, we talk in the medtech area, we don't talk about double-digit numbers, rather that we are a handful good salespeople, strong salespeople that are focusing on the university clinics around the country. And they are as many as the handful. So it is very much to focus strongly, be strong in the support of, so to say, reimbursement, etc. That information is very valuable in the start, so that the doctors can just focus on helping the patients, and we take care of all the other things. So this is what we are doing just now. And you will hear more from us regarding congresses, meetings, where we will be present. So I hope that we can have a good flow of information so you can follow us and what is happening.
Yeah, we are talking about a company focusing on the high end, and the start area is actually an unmet need in the armpit.
Yes.
So what you more or less say is a single-digit sales reps for a single-digit amount of specialized centers in US.
Yeah.
Yeah. Thanks a lot, Anna. So there's actually some questions coming up here. So I think we should take some of them, if it's all right with you.
Yeah.
There's a question here. What type of considerations do you have when you try to balance the wish for long-term financing with the risk of selling stocks too cheap? How do you solve this problem? It's probably for Aaron.
Sorry, the risks of long-term financing with selling stocks as an investor?
Let's see here. What types of considerations do you have when you try to balance the wish as a company for the long-term financing with the risk of selling stocks too cheap? So when you look into the capital efficiency, you know, and your stock is, well, probably undervalued.
Yes. Okay. I think I understand that. I think
yes.
As with any type of financing, you kind of have to deal with what you have available to you. That being said, you know, we always try to work within, as I've touched upon, a sustainable solution. I mean, the market at the moment, and it has been for now some years, has been up and down quite considerably. So that being said, I would say it's very, very difficult to predict the levels and the type of arrangements you could perhaps consider in a capital raise or financing, because they seem to be ever changing. That being said, I believe that within the management team and the board of directors, we have enough experience to be able to choose the one which is best for the company. And that's an important thing to convey there.
That's a good question, Aaron. And if we keep it there, are you looking more into a direct issue, or are you looking for a broader rights issue to take place? And I know that's maybe a little too specific.
It is very specific, and unfortunately, that's something that I can't answer. But what I would say is that it's all part of the options that we're looking into. As we outlined in the press release a couple of weeks ago, there are many different things and that's the great thing. We have a toolbox full of tools that we can use, and we're not limited to just one way of doing this. So we'll find that the most optimal mix.
Thanks a lot, Aaron. I don't know if there's some other questions coming in here, but you may post your questions. The management is open to your questions if you have anything about the company, whether it's the press release or other questions. Okay, but Aaron, then I can take a little more nasty question, because I think it's important to emphasize that you are not financially distressed.
Yeah, I don't think it's a nasty question. I think it's a relevant one, and it would be simply what's been heard, I suppose, from different people, different sources, and the simple answer is no. We're not in a situation where we're financially distressed. I mean, I think we have enough foresight to be able to plan effectively from a liquidity position. And again, I touch upon the experience of the management team and the board and the network of contacts that we have at our disposal. So I've been saying in at least my interviews that I'm very excited about this year. It's going to be a very defining year for the company, and I think investors and our external partners should be very excited for us and for what we can deliver.
Thanks a lot, Aaron. It doesn't seem there's any more questions. So what we will do is after this session is finished, we will of course post the video on our platform, and I know the company will post the video as well. Well, there's a question coming in here, so we don't finish yet. That's nice. I will publish the question here. It's probably more for Anna. Currently, anti-obesity drugs is getting a huge awareness boost through social media. Would that be a sales channel to create better awareness with your new FlexiPulse technology?
I would say that will happen in a few years' time. The most important now in our situation is to select the right customers, and it will flow by itself almost. They will sell the product for us. In the US, though, it is a good question. We have social media that is playing a different role, and where you are allowed to turn to the patient as well. And that's included in our plans for US. So even though both US and Europe, we are focusing very much on the doctor, the physician still.
So Anna, when are we going to see the first order popping in? I know this is a sensitive question, but could you elaborate a little? How far are you in the process? Because now we already one quarter, in 2023.
We are in the first quarter. We will publish as it comes out. We are working very much with a few hospitals, and to build a relationship. At least myself, I've been out there selling as well in the beginning, and it is like building any relationship. You can't just jump into the door, knock on the door, and say that, "Are you ready to buy something from me?" You need to build up that relationship. We have some, and we have a great network. So I would say this is not such a long time period we have to wait for the first order as it could have been if we didn't have had this network. But I think a lot will happen this second quarter, I would say, because we have two very important congresses, both with breast surgeons as well as radiologists in US. We have in Germany, we have their national meeting in Germany for our target group. So, springtime is a very good time to launch products. Not in the early cold January, February. That's the time to to sit down and over dinners, etc. But then something happens. The doctors want to get out, and we can meet them on neutral ground, and a lot can happen there. So we feel confident with the people we have and the list of doctors we have that we have made, so to say, the initial contacts with in the US. So I think we will come back in a good sense sooner than later.
Thanks a lot, Anna. And with that said, first of all, I would like to thank the participants for the good questions. Oh, wow, a new one is popping in here. That's good. Let's see. Can you, there's a question here about your partnership structure in Europe. Can you talk a little bit about the partnership in Swiss and how things are moving along there?
Yeah, in Switzerland, it's more political than, well, I love Switzerland because they have a strong exchange rate and they have a totally other structure than we see in the German-speaking, in Germany. However, I would say that we are proceeding. It looks really good, the way how we have set up with D-Complex, I think the name is, this regulatory partner. So we are free to do what we need to do. And those that know their geography well, it's south of Germany and into Switzerland. It's just a few kilometers, as we joke. So we have people down there that work in Switzerland as well, and it looks good. We have managed that, so to say, hurdle of regulatory paperwork and things like that. So.
Yeah, just to address this question, we know that the post-COVID situation has stressed the public sector, the public hospitality sector in Europe and US as well. But you are more addressing the premium segment of the market.
Yeah. Every hospital in US that is a big university hospital, they need to have different categories of patients. And so we select, and the doctor knows who to offer what. So it is in that way. I often joke and say that US is the paradise for new products. Europe is the paradise for old products. Don't quote me too much about Europe, but in Europe it is cost containment,
Yeah.
And it's hard to get in with new innovations. In US, it is another climate. But we should be aware that competition has the same situation and the same, so to say, feeling of if they come with new things. Now, if I may take the time, I think it is important also for the shareholders to understand we are not confronting competition directly because we are actually going in an area where there is no real alternative to surgical biopsies with our product, and that is in the armpit. If we would have focused on breast and breast biopsies, then we would have had larger companies competing with us.
Important to understand, Anna, and thank you for addressing that. So with that said, I would like to close the session. First of all, I would like to thank for the good questions And secondly, I would like to thank Aaron and Anna to join today's session with such a short notice. And as I mentioned before, we will post this video on our platform, and the company will post it on their platform after the meeting today. So hopefully the management shed some light on the current situation. And with that said, enjoy your day.